Hey guys, what's up? It's Felipe here, South Florida. Just want to give some my outlook or an update on current market conditions, and from both one of views, real estate and equity markets. So you might know, real estate is booming. Big reason for that, I believe, and the reason why prices continue to increase is because lumber prices are going up, meaning property prices, property values are going up. Um, so it's good in terms of you hold a home currently, meaning in the short term at least, because who knows is what's going to happen later down the line. Property values should continue to increase. At this point in time where we stand, we're beyond 2006, and we all know what kind of happened 2006, 2007, and dreadful 2008, which was the market bottom early January, I believe. Okay, so yeah, real estate prices are going up. On the other hand, bubbles are starting to pop all over the place. For example, Bitcoin being one of them. Don't get me wrong, I like Bitcoin, just not at those prices, you know. It's not a good time to get in, especially if you're trying to catch a falling knife. I don't recommend that. Always gonna get hurt. So yeah, that's say you can't time the market, right? But historically, things are cyclical and they tend to repeat in one way or another, similar way. We're seeing a lot of speculation, which is considerably comparable to the roaring 20s, I would say. I mean, I don't even have to point it out. You have crazy valuations for almost every other company out there. The only one I have found, which is reasonable, and I purchased, and I'm not a financial advisor. Don't listen to anything I have to say. It's SVNDY, which is the Japanese company that owns 7-Eleven. And they own a ton of other companies ranging from financial sector to you name it. So 7-Eleven is subsidiary of the major company. They recently announced that they acquired Speedway from Marathon Petroleum. So this is kind of where I'm going at. Another play that I've kind of have in mind, which is kind of interesting. However, I'm not like fully in the market. You know, I want to have as much liquidity as possible in case something or a correction does happen. I can take advantage of that, because what's the point of being all in if when something happens that catches you off guard, you don't have the money to take advantage of it, right? So Marathon Petroleum sold Speedway to 7-Eleven for, I believe, like $22 billion. Yeah, some crazy amount like that. And now recently, Marathon Petroleum announced that they're going to buy $4 billion worth of their shares back in a tender offer, a modified Dutch auction tender offer. Reason for me saying this is that's obviously going to drive up the price. $4 billion of share buybacks is an incentive to reward shareholders in a way. I believe they announced it May 17th that they were going to purchase 4 billion shares of their own stock back at a price ranging between $56 and $63, all depending on shareholders willing to tender their shares. So there is that possibility that if it doesn't come to that, the offer might not happen, right? So I noticed here that they announce all this information I'm getting from the SEC filings, the forms that the companies have to submit in terms of what they're doing and what's the progress of the offer, right? So they recently announced in one of their forms a blackout period. What a blackout period is a certain range from date to date where employees and officers, CEOs, that kind of stuff, cannot sell their shares within that period of time. So that kind of tells you that prices are gonna, the share price is gonna go up dramatically if they're kind of setting in a blackout period to prevent insider trading. The blackout period for Marathon Petroleum begins on June 9th, 4 p.m. Eastern time, and ends June 21st, of course, unless the offer is terminated or extended. So I believe it's a good option play. I leave that up to your discretion, what expiration date and what kind of price or strike price you decide to choose to go on that. But definitely an opportunity, high probability opportunity to make some money, which doesn't come every day, right? Another one that I've been looking at that were recently announced, I think last Friday, it'd be NVDA stock split 4-to-1 ratio. So in other words, for every one share you own, you would now own 4. Technically, that means you now have 3 extra ones because you already own 1, right? However, the point of this is that it also drives demand, meaning a lot of more people are going to pile in to purchase the shares over the whole stock split news. And as it is, this is already kind of like one of those really hot, popular stocks. To me, it's kind of in a bubble as well. But however, this is one of those plays where you're in and out, make your money and run away with the money, So these are option plays. Okay, so a little information on NVDA stock split. Currently is trading at $599 more or less per share. Announcement was last Friday. What was that? So the 21st of May, they announced the stock split, right? The stock price has already gone up since that announcement. They have a shareholders meeting on June 3rd. I believe is 11 a.m. Eastern time. Possibly a little earlier, I could be wrong on that. So the purpose of the meeting is they have proposal number 4 to bring up for vote, which depends on shareholders vote. Proposal number 4 is a certificate of incorporation to increase the number of shares from 2 billion to 4 billion shares. The directors approved this split. So that's already a green, a good thumbs up. Directors approve it, meaning there's a high probability that this will occur. Of course, it all depends on the shareholders vote. If shareholders approve proposal number 4, then therefore the split will occur. According to the dates that they are sharing via their SEC filings, the execution dates will be July 19th, 2021. Again, the play here would be purchase a call option. Again, your discretion, what strike, what price you use. I use my own. And get out before that date, unless you're willing to just, swing trade and purchase into the stock and just ride the wave. But I prefer option contracts. So like that, I'm limited to how long I am in the market, and I don't want to be in the market in this kind of environment for very long, because again, I want to have liquidity to take advantage of any correction that occurs. I know, can't time the market. However, history's any predictor of the future, what we're seeing now is very similar to the 1930s. Could be wrong, but that's what it seems like to me in terms of speculation and all these financial bubbles popping up everywhere. And a lot of them are being pricked recently and going down dramatically within, you know, hours or days or whatever. Okay, so let me show you some info on the stock split so you kind of get an idea what I'm talking about. Okay, share my screen 1 second. Here we go. I believe I'm sharing it now. Okay, Canadian Pacific Railroad Company. They announced a stock split on April 21st. Where's April? April 21st, right here. Kind of dipped prior to the announcement, right? Announcement came up, boom, hopped over the 200-day trading average. Execution date for this split, it was a 5-to-1 ratio split, by the way. So for every 1 share you own, they give you 5. I believe it was trading around $300 something around this range before the split. Then as you can see, after the announcement, dramatic rise all the way into the execution date, which was the 17th. Boom. That's when the split was executed. Shares dropped, they split, boom. Obviously, they've bounced back since then. However, that kind of, you know, that's where I'm getting at. Maybe it's a good call option play. It went up quite dramatically between then to then. All right, another example, EXPI, which is actually the company that I work for, EXPI. They announced their stock split on January 29th, if I'm correct. Where's January? January 29th. Look at this massive ride all the way into execution, which I believe is like February 12th or something like that. Just look at this massive rise. Boom. I believe around this range was the execution. It could have been the 16th, but you get the point. Look at this massive wave from the announcement date to execution date. Now, you know how to play with options or swing trade or whatever it is you like to do. I feel like that's a good opportunity to make quick money and get out. Limit your exposure to the market as well. It's a way to play the market without being exposed to the market. So yeah, that's kind of like where I'm coming from. I want minimal exposure to the market right now, except for where I'm really comfortable being in, which certain plays like this were high probability that you would make some money, get out, wait for another one, or wait for a correction. It all depends on what your strategy is and what you want to do. So leave me a comment, a like if you like any of the information I share. I will post some more videos in the future if I find any high probability events. All right, guys, have a good one.